Hey folks, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Saturday, November 23rd. We're going to take a look at NRDY today. So I had a request to come take a look at NRDY. Pretty interesting move lately. So let's chart a path. As far as I can tell, we've never charted NRDY before. That's quite all right. So I'm going to start sort of as far left as I can go here and put a couple of price points above where we are at the moment, and then we'll sort of work our way in as we go. Where do we want this guy to be? Like that? Okay. So there's this obvious gap fill here, right? On this day where it came down in August, 48%, and it left this giant gap. And the low on that day, the prior day, was 147. And so the high, as we had on Friday, was 146. So it's within a penny of filling that gap. So that's sort of the first thing I would say, is just like be aware that it is obviously making a motion toward the gap, may not have a single thing to do with the gap, may not have any impact once it fills the gap. But I just wanted to point that out, and just to say, just be aware that if it does play a factor, that it might be something to keep in mind. Now, when we zoom in, this sort of like dips low enough that it kind of starts to make sense to put that in. There's pretty thin action in between the like 119 and 147. Let's see if we have anything. No. So not a ton to go off of between that 119 and the 147. So I'm going to put this in, and I will just preface it by saying these are potentially weaker levels. These two that I just put in, 132 and 128, because we have really thin price action to go off of. So not a lot to rely on there. But, all else being equal, the other levels, while there's not, just because it's not super old stock, if you will, it hasn't been trading for a long time. So, but what we have to go off of otherwise is actually pretty solid levels, I would say. Okay, so here's the levels as I would see them for being kind of near in to where the price point ended on Friday. 147 to the upside, right? That gets you the gap fill. And then 159, 167, 180. Percentage-wise, there's a big gap in between them. I mean, a 6-point swing at the moment is just 8 cents, right? So there's going to be some additional levels in here, but I don't want to clutter the chart too much, but there's probably a level here at like 153, so because it's very near into that, we'll put that on there at the moment. And then one other that's sort of very near in, this looks like it might be a level. Nah, I don't feel great about that. I'm going to leave that 132. I mean, who knows if it's going to come back down anyway. But if it does, we'll see. If it doesn't catch 132, we'll see where it catches. Maybe something like, around where I just had that level. But we'll see. Now, if it continues its march on 167, 180, 189, and then there's certainly something way up here at 246. So I'll just put that as sort of like a goal post, if you will, for the time being. And if it gets up above that, like 189, starts to approach $2, and folks are interested, leave me a comment. We can come back in and we can check in on it then. Now, if it does get dippy, I would really look for it to hold that 132, even though I said it's not the strongest level that we could put on the chart. Same with the 128, but it at least doesn't depart or divorce the dip from the recent surge, right? So what you don't want to see if you're a nerdy bull, this is a weird phrase, but what you don't want to see, I think, is this current swing, right? You're in the midst of a current swing. I don't know where it'll top out. I don't know what that swing will end up looking like, but if it does come down, takes a little breath, takes a breather, manages to just deal with some folks wanting to sell their position, lock in profit, whatever. What I wouldn't want to see is for it to need to come down all the way toward this like 119, right? And sort of engage with previous swing highs. I would want it to be putting in a whole new motion divorced from anything to do with this chunk that happened after that big gap down. So we'll see if it does or not. I'm just saying, if I'm a nerdy bull, that's what I'm hoping would happen. Not just because I don't want to see it dip down to 119, but just re-engaging with this compression zone is, in my mind, stock this low of a price is just a recipe for eternal bleeding and folks just holding bags for an incredibly long period of time. Speaking of holding bags, while we're here, okay, so largely profited shares. So a bunch of those folks who must have bought way back here, I guess, ditched their positions if this information on Webull is correct. So that's kind of interesting, kind of surprising actually. But yeah, so that's what I would look for to the up and the downside. Now, if we just hide these for a moment and take a peek at what the EMAs look like. Okay, so this is pretty interesting. We have fully bullish crossovers now on the short-term EMAs. That's this white guy here, this like peach-colored one, and the red one, right? 8, 21, 34. So fully bullish there. So all is looking well. Even if it does get a little dippy, maybe it catches some support off of the 8. And this is going to move. So that 8's not going to remain at 117. So it's going to get dragged up. Like as soon as market opens on Monday, barring some unforeseen catastrophe of a price fall. But what's most interesting to me is this 183 that's sitting up here. 183 EMA, that's the long-term EMA that I watch. And let's see, you see how it reacts off of that, right? When it was approaching it from below before, it essentially double topped off of it and then put in a third rejection, and then it had that giant plummet, right? And if it makes contact with it now, it would be the first time that it made contact with it since like March of 2024. So almost, a year, 3 solid quarters, we'll say, that it's put in price action and hasn't been able to get to that 183. So like I said, it's dynamic, so it's going to move when market opens, when additional candles get put in. But 161, basically 162 right now, would be on high alert watch for me, again, if I'm a nerdy bull. And just keep in mind, just because it breaks through doesn't mean that it's in the free and clear, right? You see it break through here, and then the next day it immediately plummets 10% and gets itself back wrestling with that 183 again. So just be cautious of what it does on the break, right? It broke there, and then it drew down 2.5, and then it drew down 4, and then it drew down almost 4, and then it drew down a little over 1, right? And got itself back under, all the way back to testing that 34 EMA. And then obviously you got the big fall here when it rejected off of the 183 again, and the short terms turned bearish, right? And even when it had this brief push here, the short terms were still mixed, right? The 8 EMA had crossed over, but the 21, that peach colored one, had not. And so you had the beginnings of maybe an attempt, but between the rejection off of here and then it just immediately coming back down, right, that should have been sort of obvious even just from looking at the EMAs that this was not going to bode well in the coming price action. And that was certainly the case as it dipped. At that point, it would have been up above $3, and it's cut that in half and more. So that to me is the all-important thing. I would actually, now I know I'm a stickler and a lover of my levels as I put them on the chart here, and there are going to be some that are going to be close proximity to where that 183 is, depending on exactly where it situates itself as the price action gets put in. But somewhere, if it does move relatively quickly toward at 159 to 167, somewhere between those levels that we have on the chart anyway is going to be where it comes in. But if I'm watching this, I'm probably more interested in just scoping the EMAs, see what's happening, because it is in such close proximity to the 183, and that has proved to be so important in the past. Now, on the Thinkorswim side of things, we do have this relatively recent lengthy trigger, fire, nothing really happened, and then as we say, re-trigger, re-fire, that's where your move is coming in. Now, if you're looking for a spot of hope for the nerdy bulls, the phase oscillator down here is not quite to 100 yet, right? If I put it on here, it's at about 99. So definitely room there. Nothing there that would sort of make me sort of give a sideways glance to the price action. And, through the month of November, what we have left of it anyway, holidays and whatnot are going to cut it a little bit short. But, you had this call trigger here, and this would put the +1 ATR level up at 184 at the moment. And right now it's only catching resistance right where you'd want it to, right? This is a beautiful call out by the setup here, right? By setup, I mean the way that we've set up the Thinkorswim platform, not by the setup of the price action. Price action coming up, stretching out of the channel, which is fine. And then above the call trigger hits the very first level, right? About 148 or so. Right in that zone is where it started to catch immediate resistance and put in the candle as we see here. And the question is going to be, can it fulfill that call trigger and get all the way up here to 184 and stretch through? Now, nice thing is if it does, and even if it sort of compresses along that level or even pulls back a little bit, it may come in right above the call trigger for the December levels, right? Which would put it coming in at or about 162. And then if it does fulfill that out, it hits 197, maybe gets a little wrestly there, if you will, and then pushes on to 233 if it fulfills that whole level there. So nice motion here, exactly what you'd want to see it be doing, and plenty of room left both from the phase oscillator and from the ATR levels. And this retrigger and refire is pretty fresh, right? That's only a few days old. That's 4 trading days old since the fire happened on the TTM squeeze indicator. So pretty interesting maneuver there. But, I wouldn't get sucked in and be sort of too overly bullish or overly bought into this Thinkorswim setup. I still would, because I tend to be a little bit more cautious, so I guess, take that for what you will. But I would really, really fixate on this 183 EMA and see what it does off of that. Who knows? It may blow through it. If it blows through it, I would fully expect to come back down and retest it, but it may not. There could be, catalysts that come into play, even just retail strength or meme status, whatever, or some macro forces. For that matter. But if it does get through this 183, to me that would be the thing that's most critical. And then maybe I start looking at that 184 target, which isn't so far off dollars and cents wise, but percentage wise is another great gain. All right, folks, so I hope that you're enjoying your weekend and that you have a good trading week ahead. And as always, I appreciate you watching, and I will see you in the next video.